A huge part of my strategy that has allowed me to achieve a 70+% win rate is trade management. Over the past 1.5 years, I have publicly live streamed my trades from entry, exit, TP, built a whole journal for you guys to see exactly how that happens, and also to go back and see how I did manage trades, and as well as just to see a proven track record of this statement. So with that being said, this is what entitled me to make this video, because without having a trade management plan, I would not be able to achieve that. So definitely stick around to the end of the video. Feel free to subscribe to us. This is a growing community of amazing traders here, and I really do believe strongly that you can benefit from our content. That being said, all of that YouTube BS out the way, let's get straight onto the charts and get into this video. Let's go. Alright guys, so we're here at the charts and we need to understand the two different types of trade. Now, trade management is a huge part because a lot of people, I want to also talk a little bit about this. I didn't include this in the introduction, but a lot of people think about trade management happening in the drawdown phase, right? You want to manage your trade before hitting stop loss. You want to manage your trade in drawdown, manage it from, being stopped out. It's actually wrong. Right, we want to focus and manage our trade in profit because that's where the money is made. Our strategy should allow us not to sit in drawdown most of the time. We should not be taking losses most of the time, even though they will happen. We should try and mitigate that, right, and understand that where the money is made is when the trade is in profit. So we need to understand how we're going to maximize that profit. So here's the thing. The first thing we need to do is understand in trade management, we have three things. The first thing we have is obviously your stop loss placement, TP placement. The second thing in trade management we have is cutting losses shorter. And the third thing we have is break evens, right? That's what we have. We can close break even on a trade. So I want to explain to you trade A and trade B. These are two of the most common entries I personally use. And this is the two most common most people will end up using. Trade A will be a continuation type trade. This is where there's momentum in the market. We are seeing candles, and I can draw that a little bit better. We're seeing what? Candles close bullish or bearish, whatever direction, closing with momentum, right? It might look something like this. You might have something like that. And then we are closing what? We are closing with momentum. What do I mean by momentum? I mean that chart is moving through momentum and you're entering on these big candles here, expecting momentum to continue here. And it could look something like this, right? And you could even be entering here. This resistance doesn't even have to be here. So your entry could end up looking something like this, where you have a candle because you had to get out the range and you're entering on momentum trades. This is great to use these type of entries when we're in a market trading a session that we're pushing, okay? So I'm gonna leave that for you. That's part one. Part two is when we're trading based around structure. So this is what I call zone trading. This is where we're taking entries from where price has created some form of structure. So I'm going to draw that up for you. So this is B trade, right? And the B trade is trading when we come back to zones. So this is zone trading. This is continuation trading. This is zone trading. Say we pull back to a nice zone. We're looking for price to leave that zone to continue the macro trend of buys. We'll use the theme of buys today. And we're going to be taking buys from down here, right? And we're going to be targeting stop loss will go where? Oops. Below the range, right? And we'll be targeting whatever our target is, okay? Now, these are trade A and trade B. Trade A is going to require aggressive management because you're trading in a phase of continuation. You do not expect, okay, you do not expect candles to pull back harshly. The reason is because we're in continuation. And when candles do pull back harshly, they're going to pull back to create structure or to pull back and retest certain zones before continuing up, coming back to zones of what you could call like a discounted area, or you just come back to a random area, or just continue small pullbacks, which is fine to continue up. In trade A, now I want you to remember throughout this video, trade A and trade B. In trade A, your focus is going to be getting from point A to point B as efficiently as possible and as fast as possible. So pretend this is a 15-minute time frame. If we're having a 15-minute time frame, close above resistance. This is known as our setup one. It's one of our setups. I advise you to go and check the videos that we have on the channel. Go and see the full free course there as well. If you want to see more about setups and planning, you can see free webinars down below. All of that stuff is there for you. We are looking for continuation. If we see price reach an area of interest, meaning when we take a trade, we have to target support and resistance. And this is part of management, having accurate targets. So we will be using that as target. So if the trade comes back we need to be aggressive with what? Managing the trade, moving to break even. Because this is where you get caught in the fake outs, is when you expect price at your entry to continue just trending and trending and trending when it doesn't. You're looking in these type of trades to get your 1-to-1 to fill a range from the first support. Your goal is to basically to trade like this. You are looking for price close above a resistance. You have an area here, you're looking to trade to that and be done in one candle. If we see this start to mess about, high chance it's going to do what? High chance it's going to start to reverse. And that's why people say breakout trades don't work, is because they get caught up in this. It's not that breakout trades don't work, it's their targetability is not working, their entry confirmation is not working, the time that they take trades. You need to be taking these trades in high volume times. London session, New York session, and making sure that you have all of the confirmations. As I said, the confirmations for entry, this is about management, are on my channel, right? So you can watch that to see how to exactly enter. Moving to trade B here, what we can see is trade B has more structure. In this type of trade, we don't want to be aggressive because we have a lot of structure being formed. We're buying from lows, expecting today price to go up. So what we're going to let it do that. As long as price creates the higher lows, respects where our stop loss is below structure, respects the zone, right? This is a zone. As long as price is respecting the zone, it should go up. If you start to, if you start to move stop loss to break even in these scenarios, then the natural pullbacks of price creating healthy structure is going to get you caught out. And when price creates healthy structure, right, and you went break even, you're going to be stopped out break even, and the trade is going to go to TP, and you're not going to make any money, and it's going to be long-term unprofitable move there because you are closing trades too early. The second thing you do is obviously not having correct targets. Your stop loss in these scenarios might be a little bit bigger. The reason they might be a little bit bigger is because of the reason that we basically are putting stop loss below structure here, right? So naturally it will be a bit bigger than this scenario where we put stop loss below a candle, right? Those are the two scenarios, candle or structure. So since naturally it's bigger, we need to have bigger targetability. So making sure that your next support and resistance zone, your higher time frame zones, are actually accurate is going to be very important, because we're going to target support and resistance. So let me get into the charts and show you how to find targetable zones, how to manage the trades in the targetable zones. But what's very important about management at the moment here is managing your trades in making sure that you know when it's good to be aggressive with break even. Break even means moving your stop to entry, that if it comes back you lose nothing. And when to let a trade do its business, create structure, and trust in the analysis and trust in the plan. Those are the two scenarios. Now we're going to run those two scenarios, and I'm going to show you how to find targetable, zones that you can target. So in essence, zones that we're going to target in the markets are going to be basically your support and resistance. The rule is whatever time frame you enter a trade is the zone you're going to target it, right? Unless you're looking to play the trade on higher time frame, which is more of a different thing. What we're looking for, and this is my LTA, you can check videos about my LTAs, is clean candles. Between these clean candles, there's nothing because they're clean candles. But on the peripheries, there's either going to be a resistance zone or a support zone. So when you're trading, you constantly want to be doing what? You want to be looking left. If we take this scenario here where we have one of our continuation trades, let's say here, where we have closed above the range, right? So this is going to be a perfect example here. So this is where you've closed above the range, right? We have structure here. But this is more of the aggressive type. Why is this the aggressive type? Because we're buying continuation. We're buying continuation above a range instead of buying down here to test something up here, right? That would be a different, right? Same thing here, continuation. Continuation at some point can have heavy pullbacks like this, which is why we be aggressive. But our next zone to target is going to have to be the next resistance. Your target is going to be resistance. So once you have the close above here, you have to have accurate targets. You have to target the next resistance. Guess what? If we were to close above here, guess where our next target is? Our next target is going to be where? Somewhere inside here, this next resistance zone. Because price will trade range to range. You need to have bias, which means the direction of the market. You can check out. As I said, I have videos for all of this. Bias needs to be on point, and you need to be able to identify what makes most sense today. But your target is going to be very important because too many people try to target more. there's a high win rate to get to this point, so you don't need more than your 1-to-1. In this scenario, let's see what risk to reward we had. This is a perfect example of set up one trade here. We had a 14 pip stop loss for a target of 26 pips. This is giving you almost a 1-to-2 risk to reward, which won't always be the case. The reason is because you might have smaller targets as your intraday trading ranges. So if we go ahead and see what happened, yeah, blessed with one full candle to TP, and that's the exact move you're looking for. If you start to see rejection at these zones, right, earlier zones, if you start to see price messing about, that's the time to be more aggressive, put stop loss at break even, right? And you have to target accurate zones, okay? Now, at these zones, depending on your risk, many people say, why don't you leave a runner to see if you can reach your next zone here? The problem with runners in these type of positions is, guess what? If price is going to pull back, where is it going to pull back to? It's going to pull back to my entry, right? It's going to pull back to my entry, and that's going to be a problem because I could go into drawdown, more so I could lose, because where's my stop loss? My stop loss is not below structure. I can't manage the trade because it's a continuation trade. So in order to do so, it makes sense to close full, take what the market gives you, and move on to the next trade. Because if this pulls back here and creates support, guess what? I can take another entry back towards the upside. Okay, so that's where managing trades is very important, to make sure you're securing profit and making gains here. Now, obviously in the beginning, you guys saw that, I trade on live stream and stuff like that. You'd have to watch my trades to understand how this works, but I'm trying to differentiate two different setups and stop you guys from being greedy and understanding when to take profit in the market, because that's where money is made. So in this scenario, targeting what? Targeting the next resistance is going to be where you take profit. But Harry, we do a markup, right? We mark our support and resistance from daily down to 4 hour, down to 1 hour. Yes, if this was a 4 hour zone before, say this was a 4 hour, check the name, 4 hour resistance, that is going to be your target. Your target is actually going to be lower, and you're going to just about get a 1-to-1, because you have higher time frame levels are going to be more important than lower time frame levels, and that's the whole reason we do the higher time frame markup, so we know what the hell is going on lower time frame, so then we can target accurately, not give back in the market to where you take a trade, you see that price should reach here, and rejects. You weren't aggressive, you didn't move break even, and you say breakouts fail, I suck at trading. You need to be able, when you're taking these trades, we need to keep accuracy very high, right? So let's go ahead and look at another example here. So in this example here, we can see we have a support here and a resistance up here. In this case, our stop loss in this type of position where we target down, clean candles till this zone, we're looking to fill the whole range. This is where our stop loss will go above the range. We have structure to protect us. And this is a different trade completely now, because now we're trading from the origin. If you notice, this is the origin of the move, right? So obviously we've been trending bearish. You can see that very clearly. Price is trending bearish. You will be able to identify that. We close below the range, one of our entry models. We have clean candles here to this next zone. This is going to be your watch zone. But since we know we're trading from the highs and we're trying to get down, I'm sure if you went on a 30-minute, let's replay to this area. If you went to a 30-minute, you'll see that that's probably a clean area there. As you can see, it's clean, right? This is where market will ebb and flow, like this. Create supports, create resistances. This is where it makes sense to potentially take what? Position out. Because now, since we're trading from higher zones and we're trading from a zone, not just a continuation, now we can start to say, hey, a runner could make total sense here, right? And I can take out half of my position. Or if you have a completely higher time frame idea, like let's say you're just targeting something on higher time frame, remember those will have less probability to play out. Remember what we discussed in the beginning? Bigger the target, the less probable chance it has to hit. So that's where this scenario, in terms of managing your trade, would be an option to do what? To take out 50% here at this first target, right? And your first target should generally be that 1-to-1. In this case, it is, about your 1-to-1 here, right? Just a little bit more, right? And you can see how that naturally plays out. So stop would go above, target your first support and resistance here, which would kind of be in this whole zone, to be honest, right? You're not moving to break even yet. You can only move to break even here at this zone. And now that you close 50%, which is your trade management, 50% close, now you can leave the rest of the run, and you can even adjust stop loss, right? You can adjust stop loss to what? To something like this. Anything closing back in the range would invalidate your trade, And you could do what? You could leave the trade and just not lose anything, make a little bit, worst case scenario. Or in this scenario, you can get a very nice runner and target higher time frame zones and potential continuation here, right? So let's say you were targeting in this scenario, you're targeting for the 100 pips here, you closed half here. Now guess what you can also do? When structure is being made, you can trail your stop loss. So let's say that this blue line is stop loss, this new structure is made, stop loss can go above there. Now you wait and see what happens, right? You wait for structure and resolution. There we go. So new stop loss now can go above there. And now you can just ride the journey, right? So these could be nice to ride the journey. Again, stop loss would go above there. And, you know, obviously in this scenario, we were trending nicely. In a ranging market, you would have, yeah, there you go. And you'd be out there for like 114 pips, right? So that's the power of being able to catch those positions, but you need to be in the right market positioning. Can't be at the top of a range, can't be at, you know, close to resistances, close to supports on higher time frames, because there's no continuation. Also in this scenario, keep in mind, we're not in a ranging market. We are in a trending market, and a trending market's more than likely going to give you heavy pushes there, right? So that's another time you would adapt that strategy and you would say, this is where I would allow myself to run. But it's very important to be securing profits at higher time frame levels, your daily levels. When you come to the chart and do your markup, for example, in this scenario, my markup would be daily support here, right? I would go down to 4 hour. I would see, hey, there's a strong 4 hour support. This is shit you have to be securing at. There's no playing games, right? Don't be greedy saying, look at the reaction, right? That's exactly where I trailed my stop loss without doing my higher time frame markup to show you this. But why did we see a reaction there? Why are we seeing a reaction in this 4 hour zone? Look at the reaction in the 4 hour zone, right? We're seeing a heavy reaction here. Now, if you're playing tight games like trading continuation here, this reaction could make you lose everything, because you could be up in a trade, short position here, taking this type of trade to get to 4 hour, not secure at 4 hour, move to break even, which is the correct thing to do at 4 hour, get stop break even, let it fly in your direction. Now you're revenge trading. Now you're trying to get in back into the market, and it's all a complete mess. So this is our backtesting simulator Pip Labs. And before we wrap up, I want to show you an example of how you can practice this, right? How you can practice this before going in the live markets. We do have a demo version, so feel free, link is in the description. This is our own backtesting. We're the first web-based backtesting software. If you don't know what a backtesting software, basically where you can go practice your trades. So, and simulate it. And you can practice your risk management. So let's say we're buying from structure. This is a trade where stop loss is below structure, can target something up here like this whatsoever. This is where we can take a buy here, and we can play the candles and watch how they would have played in real life. Right, and we're going to speed this up for this demonstration. There we go. We're triggered in the position. P&L can be seen at the bottom of the screen. Let's go skip by 30 seconds so we can speed this up. So obviously here, since our stop loss is below structure and we're expecting a move to continue up from this zone, we don't want to be too aggressive with management here. Why? Because we're expecting price to go up, and if we were aggressive with management, we would have gone with break even. This is not a continuation trade. This is a retracement trade. We're trying to retrace a move and get in from the lows. So this is where, okay, look, a little bit sketchy, right? Sitting in drawdown here. Can we respect structure? If you don't respect structure, you will lose the trade. And this is going to be good to practice your emotions here, right? Practice your emotions and say, hey, for me, there's no way I can manage this position. The only way I can manage this position in terms of trade management is if something closes below this support, because it would be a break of structure. Otherwise, I have to let it do its thing, right? I have to let it do its thing. So now that if this closes bullish above this resistance, we will establish a new zone, right? I'm going to skip this by 1 minute. If we establish a new zone like this, this will allow me to move my stop loss below the candle low, because again, we have to respect the support in order to continue up. Now, as we start to reach this next zone here, this could be your potential, like I said, TP1, right? In these type of zones. As we start to reach the next zone, that could have been your potential TP1, right? Which obviously I didn't pause fast enough to close there, but it didn't really tap it. So we'll make sure it does tap it before we look for a TP1, because we can't dictate that, right? We can't say, hey, that was close enough, because you can't do that in real life market conditions, right? So after it creating higher lows like this, perfect structure, you can see now we've come first to our first resistance zone, which is going to be TP1. This is where you have an option, if you're expecting higher time frame to continue, to either close full, be done with your trade at your 1-to-1, or you can go ahead and close partials, right? So you can practice, right? You can practice, right? Your stop loss can be a break even because now we have to respect this structure, and you can either close the trade full, right? Or you can, of course, close half, let the trade run, right? So up to you to do what you want to do. In this scenario, let's skip by 15-minute candle, see what would have happened. What would have happened? It would have come back to your entry, right? I actually didn't skip that, but you can see why having good targetability is important and moving to break even. So notice that I decided to close full because I'm looking to get from point A to point B, did my job, my 1-to-1, but I moved break even because we tapped the target. If you don't do that, and you do it too early, you mess yourself up. You will still make mistakes with it, but if you don't do it, that's where you mess up. So I hope all this example was great. It's a really in-depth video. Definitely leave a like. If you made it to the end of the video, comment, "We manage in profit." Comment that, "We manage in profit," if you made it to the end of the video. With that being said, let's get it, guys. Take care, trade sharp, and hopefully catch you guys very, very soon. Peace.